I'll give it a couple of minutes so that people can settle down, those that want to leave, so that we can go to the question-answer session. We've got a few questions that have already been sent out here to the front. Can I suggest that it would be a lot easier if questions are written and sent out? It's a bit like pre-launch, you know, first come, first serve. So if the questions are written, we give it priority. Firstly, I have to say thank you very much to all four speakers, Mukhtar Bhai, Akbar Bhai, Hasnain Bhai, and Mahmood, for sharing their thoughts on their experiences, on their understanding of the market. Clearly, these are their opinions. These are their understandings from information that is available to them, information that they see on a day-to-day basis. Now, I'll just roll through some of the questions that we've got. A couple of them are on banking, so it's quite an easy choice. Mukhtar, right? Yeah.
Okay. Thank you. The first question is, does the UAE government guarantee deposits in all banks operating in the UAE? The answer to this question is in two parts. The announcement that was made by the federal authorities came in two parts. It initially said it covers all UAE national banks, and then there was a clarification which said banks with significant local operations. I think the intention here of the central bank is to cover all retail depositors. Now, there isn't an explicit statement that it's covering all UAE banks, but all banks with significant UAE operations are covered. I think I can only restrict my comments to that. There's been no, I think importantly to note, there's been no incident where a UAE bank has failed to meet its commitments to a depositor to date. There's another easel somewhere. Yeah. This one?
Yes.
Okay. The second question that was posed by somebody from the floor was recovery will be from the west or east, question mark. I think that the answer to that one is that, look, the reality is that the East is relatively less impacted by the financial crisis than the West is. But one notion that has been dismissed in the world is that the East and the West are decoupled. That is not true. The East is the world's production factory, and the West is still the world's consumption place. So the reality is the recovery probably will be beginning in the East, but for it to survive and sustain, it requires recovery in the West. The second question was government intervention. Is it an injection of capital, or if so, is the cash coming from bonds or gold? The answer to that is very simple. This is government cash in the form of government reserves. So it's the money that the government holds in its own accounts, and that's where the money is coming from to provide capital or liquidity. And the third question, what is the secret of HSBC? Well, I clearly have a biased opinion. To be honest, I think the honest answer about what is the secret of HSBC, it's really two things. It's to be conservative and to be cautious. Never get excited in the good times and never lose your head in the bad times. A banker's job is to be prudent and conservative. HSBC has lived by those ideals for a long time, and that is what has made the institution what it is today.
I'll just add to that, and I stand corrected on this, but I think one of the first banks that wrote off its subprime a long, long time ago before we heard about this, it wasn't even called subprime in those days, which was HSBC. It took a huge hit, 900 million?
Yeah.
in 2006.
Yeah.
So come clean, don't hide it. And I think for me, that's a great confidence factor when it came to that position for HSBC. There were perhaps other banks that did it, but I know of this particular one. Whilst we are talking about guarantees, the investment done in national bonds, sovereign backed, i.e. backed by the government, so yes, secure. We're in the business of giving goods on credit, and 150 days or so. The reality is when there is a liquidity crunch, there is also a factor of survival of the fittest. And there's also going to be, as you've heard repeatedly, consolidation in the marketplace. There are going to be businesses that are not strong enough that are going to fall by the wayside. So naturally, in this time, your exposure to what would have otherwise been 150 days is a lot of credit exposure. But in the best of times, you may have been comfortable with it. In this day and age, you would definitely want to rein in some of that debt, and you have to make the call of what level or percentage of debt you're able to take in terms of bad debts. You know, how much of it profit is worth versus the additional bad debt risk. Because in these times when liquidity is tight and the market is uncertain, there is going to be much more default.
There's a question here which poses the question, why are local banks offering 5 to 6% interest rates when rates are at 1%? Does that not reflect extreme risk? The simple answer to this question is that those rates reflected what in the UAE was a liquidity crunch. Remember, the UAE banks were not suffering from credit-related issues, i.e. credit losses. They were suffering as elsewhere in terms of liquidity from the foreign banks was withdrawn, and therefore they had a huge pressure to fund themselves. When banks find themselves under that pressure, the way that they raise liquidity is to increase interest rates, which they have done, and obviously they've attracted deposits, and also they've received significant funds from the UAE government as part of the federal process. So I think the answer to that is yes, at one moment in time there was an issue which has been subsequently addressed. Okay.
There are two interesting ones here. One is my favorite one. It's about why is the dollar rising? Mukhtar Bhai.
I wish I had a crystal ball. Look, I think the outlook on currencies, as on other capital markets, whether they're currencies or commodities or equities or bonds, remains pretty uncertain. I think the reality of the dollar's rally is largely associated with the fact that the dollar has been artificially low for some years. It's not coincidental that also dollars tend to rally at the time of the US presidential elections, as there's a level of expectation that a newly elected president will invest in the growth of the US economy, and that will have beneficial impacts. And I tend to believe that there's a certain element